Here's a summary of Zillow Group's Q2 2025 earnings call, focusing on key financial metrics, forecasts, risks, highlights, lowlights, and executive statements designed for clear delivery. Hello everyone, and welcome to Zillow Group's second quarter financial results call. Today, we'll be reviewing Zillow's performance and future outlook, with insights from CEO Jeremy Wacksman and CFO Jeremy Hofmann. Overall performance highlights: Zillow delivered a strong Q2 2025, exceeding expectations with double-digit revenue growth and achieving positive net income. The company is successfully gaining market share in both its for-sale and rentals businesses while maintaining cost discipline. Key financial metrics for Q2 2025: total revenue reached $655 million, an increase of 15% year-over-year, surpassing Zillow's outlook. For-sale revenue grew 9% year-over-year to $482 million, significantly outperforming the broader housing market, which was essentially flat. Residential revenue up 6% year-over-year to $434 million, driven by agent and software offerings and the new construction marketplace. Mortgages revenue saw substantial growth, up 41% year-over-year to $48 million, exceeding expectations, with Zillow Home Loans origination volume growing 48%. Rentals revenue accelerated to 36% year-over-year growth, reaching $159 million, primarily fueled by a 56% increase in multifamily revenue. Active rental listings reached a record 2.4 million. EBITDA reported at $155 million, at the high end of Zillow's outlook, representing a 24% EBITDA margin. Trailing 12-month EBITDA grew 26%. GAAP net income: Zillow reported its second consecutive quarter of positive GAAP net income. Cash and investments ended the quarter with $1.2 billion. Management's forecasts and outlook: full year 2025 revenue. Zillow now expects mid-teens revenue growth, at the higher end of its previous low to mid-teens outlook. Q3 2025 outlook: total revenue projected between $663 million and $673 million, representing 14% to 16% year-over-year growth. For sale revenue growth expected to be similar to Q2 levels. Mortgages category revenue growth anticipated in the high 20% range, with Zillow Home Loans origination volume projected to grow over 40%. Rentals revenue growth expected to accelerate to over 40% year-over-year, driven by further multifamily acceleration. EBITDA forecasted to be between $150 million and $160 million, translating to a 23% to 24% margin. Long-term potential: Zillow reiterated its confidence in the $1 billion-plus revenue opportunity in rentals. Significant risk factors: while not explicitly detailed as risks in this segment, the company operates within a challenging housing market with macro uncertainty. They are planning for continued market flatness and are not assuming significant macro tailwinds. Investment in variable costs ahead of revenue growth, particularly in rentals and Zillow Home Loans, could impact short-term profitability if growth trajectories don't meet expectations. Key strategic initiatives and developments: Housing Super App. Zillow continues to focus on creating a seamless, tech-enabled, end-to-end transaction experience for consumers and industry professionals. Enhanced Markets. This initiative, aimed at connecting high-intent movers with high-performing professionals, is progressing well. 27% of connections are now through the Enhanced Market experience, with a goal of 75%. 96% of these connections utilize Follow Up Boss. Zillow Home Loans. Adoption rates remain strong, with purchase loan origination volume growing significantly. Enhancements to down payment assistance and FHA loan offerings are expanding access. Follow Up Boss. The software platform is being enhanced with AI features, including AI-powered smart messages and improved reporting tools to boost agent productivity and client engagement. Rentals Marketplace. Zillow is building the most comprehensive marketplace, now featuring 2.4 million active listings, with multifamily properties leading growth. Partnerships with Redfin and Realtor.com are expanding distribution and value for advertisers. AI and automation. Zillow is integrating AI across its platform to improve consumer experience and supercharge professional productivity, evidenced by features like Sky Tour and AI-powered messaging and follow-up boss. CEO Jeremy Wacksman's key statements. We are gaining share in for sale and rentals, and we're doing it while maintaining cost discipline to deliver on our 2025 targets for continued EBITDA margin expansion and GAAP net income. Consumers and professionals experience a digital, streamlined, automated, and delightful process in almost every other part of their lives. And it's reasonable we expect the same in real estate. That's where Zillow comes in. We are building the truly integrated, digitized end-to-end transaction experience. Zillow maintains the #1 position in both for sale and rental traffic. We're demonstrating consistently strong growth and are positioned for more. We are on track toward the full year 2025 targets we've laid out, and we are confident in our ability to keep executing in Q3 and beyond. We are moving fast. We're staying focused, and we're building real momentum. Our teams are delivering to get more people home while also helping our partners grow their businesses. We are tremendously excited about AI's potential to rewire the industry just as it rewires all of us as workers. CFO Jeremy Hofmann's key statements. Q2 2025 revenue exceeded our expectations, up 15% year-over-year to $655 million, which was above our outlook range. Our better-than-expected revenue performance, combined with effective cost management, delivered EBITDA of $155 million at the high end of our outlook range. Q2 EBITDA margin was 24%. For sale revenue grew 9% year-over-year in Q2 to $482 million, 700 to 800 basis points above residential real estate industry growth. Rentals revenue in Q2 was $159 million, with growth accelerating to 36% year-over-year. This growth was driven primarily by our multifamily revenue, which grew 56% in Q2. We are now convertible debt-free and have $981 million remaining on our share repurchase authorization. For the rest of 2025, we expect to be more selective in our share repurchases. We continue to expect the Redfin partnership to be accretive to EBITDA dollars in the second half of 2025. We are on track to deliver expanded EBITDA margins and positive net income for the full year 2025. We expect our variable cost base to grow ahead of revenue in 2025 with our initiatives, but grow more in line over time as initiatives scale and mature. Lowlights, or areas of continued focus, variable costs outpacing revenue. While acknowledged as strategic investments, variable expenses are growing faster than revenue, particularly in rentals and Zillow Home Loans. Management is focused on ensuring these investments align with expected growth curves. Market flatness. Zillow is navigating a housing market that is expected to remain flat, necessitating growth through market share gains and product innovation rather than macro tailwinds. In summary, Zillow Group demonstrated strong execution in Q2 2025, driven by impressive revenue growth, particularly in its rental segment and a rebounding for sale business, all while managing costs effectively and delivering positive net income. The company is well positioned for continued growth, with a clear strategy focused on building its housing super app and leveraging AI to enhance the real estate transaction experience.